Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have David Elledge, Senior Vice President of Equity Research at Wolfe Research on the QES team, to discuss how retail traders have become a more important aspect of the overall stock market. David, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
You recently published a research report concerning retail investor trading using a database from the Nasdaq data link. Can you tell us more about that?
Sure. So the Nasdaq Data Link is a marketplace for alternative data delivered through APIs that make it easy for institutional investors to use in their investment process. One database that we investigated for a paper that we recently published is concerning retail investor trading trends in terms of buying and selling activity. And the database that we used specifically is named UREF, which is short for US retail equities flow.
Can you summarize some of the trends that you noticed in your research?
Yes, so we found that retail trading has doubled since the start of the pandemic as people, began to work from home and later received stimulus checks. That trend has actually continued into 2022 as we still see pretty high levels of retail volume. And not only have retail investors become a larger portion of the overall volume in the market, they have also been net purchasers of equities in every year since the data set started in 2016. So retail investors also make up a larger portion of overall trading within small cap stocks, where it is comparatively easier to achieve a significant proportion of the trading. And they also tend to focus on tech stocks and consumer discretionary companies and tend to avoid trading in somewhat more complicated sectors like financials and utilities.
And David, in your report, you mentioned that retail traders have become a more important aspect of the overall stock market. Can you speak to that?
Yes, so we created a factor named retail participation, which is essentially the percent of overall trading volume within the last month that was traded by retail investors within an individual stock. And we added that factor to our Wolfe QES broad US risk model. And what we found is that cross-sectionally, that factor explains more systematic risk than other positioning type factors in the model, like hedge fund crowding and ETF flow and short interest. So even more risk than those other factors. And that risk has actually increased pretty substantially since 2020.
You also showed that sentiment from retail investor trading has predictive power in the short term.
So we found that that sentiment and flow from retail investors, which is essentially the net buying activity relative to overall volume for an individual stock, it positively predicts returns over the short-term horizon. So from a day to a week. So the stocks that are purchased on one day tend to outperform the next day, and the signal actually becomes stronger the higher the proportion of net buying activity that occurred.
But you also touch on investor attention and the times when retail investors get it wrong, so to speak.
What we tested, which was influenced by some relevant academic research coming out of Berkeley Haas from Terence O'Dean, is that when there is a high abnormal trading volume within a stock, originating from retail investors, they will push the price up, and then the stock subsequently gives back these gains over the next several days, and vice versa. So following heavy selling activity combined with relatively high retail investor attention, the stock price is beaten down, and then the next day the price tends to recover.
And David, are retail investors still trading as heavily as they were before the market turned down?
Yeah. So the market has it's rebounded in the last week, but we're still down double digits year to date. And I think the thought process is that trading is obviously less enjoyable when you're experiencing losses. So you might think that retailers have shied away somewhat, but in fact, retail investors are still net buyers of US equities, and so they are still adding stocks to their portfolio, although not quite at the same rate as they were before. And volumes have also been just as high during 2022 as they were for the 2 years before that.
All right, David, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Joe.